Oh, look who's showing up. Showing up for the evening. Oh, to Instagram. Here we go. Curious George, Secretariat. How's it going? Tony does what? Hey, Tony, what's happening? Tony likes to show up. Dividends for cash flow. Look at that. Mikey G's here. How's it going there, Mikey G? Okay, so we got Instagram, Yahoo. Oh, wait, Instagram, YouTube, TikTok, Facebook, and YouTube again. So YouTube twice. Well, all blah error eating. Let's get on with it. Ed. Hey, James, what are your thoughts on DJT? Same as they were yesterday. They went up today, didn't they? Something in my eye. Sorry. Oh, look at this. Over here on Instagram already. How's it going over there on Instagram? Yep, I need to turn something around. All right, Tony does what? Lots of late day action in Para and Nordstrom today. Even Kohl's started to rise late in the day. Well, let's take a look at those three. Got to get me a pen. I don't have my water. Damn it, nothing to drink. Nothing to drink. Nothing left to smoke. Praise Pearl. Stocks are just crashing. Mike. I don't know what to tell you there, Mike. You can tell me that pen don't work. Hey, Mr. Al, how's it going? Why do I hold on to pens that don't write? You ever noticed that? Like and share can create more viewers. Well, let's get some more viewers in here. See what's going on. All right, now, we wanted to look at Kohl's, Nordstrom, JWN. What was the other one? I fell asleep last night. TikTok listening to your live. Oh my gosh, be that boring. Wow. You got a stack of pens just like mine that don't work. So much I expected to be out of at least two of those tomorrow. Yeah, you and me both. Do I live in Florida? I actually travel back and forth from the Boston area to Florida. So yeah, I like to move down to Florida and be there all the time. Paramount, thank you, P-A-R-A. All right, let's get started. Now, sorry I'm a little bit late to get started. All good. Not buy stuff you don't want to hold. That's true. Well, I'm in Vegas. Drop by and say hello. I get all the comps I can use. I may as well use them. Well, that would be great. At least I think so. All right. Tanker Friday. Chris, I don't know what Tanker Friday means. But let's get on to get started. I have a big problem with ALB. Uh-oh, Mikey's got a big problem with ALB. Let's look at ALB from Mr. Mike. LB. ALB is at 111.18. Hey, Doc, how's it going? Do I trade futures? No, I don't trade futures, not in this account. This account is just for dividend stocks only. Alrighty. ALB. Abelmo. A year ago today, 207.74. Dipped down to 171. Bounces back up to the high of the year at 241.19. I bought back most of my calls for a few cents and sold calls for next Friday. Oh, it's a great plan. Got in at 129, and they are going to issue more stock. Okay. Hertz looks like a good buy. We'll take a look at it, Tony. HTZ. HTZ. All right, we just might be able to get to that tonight. Did we look at AGNC? No, we did not look at AGNC. AGNC. We may or may not get to that tonight. I got a whole bunch to look at. Can we do MET? Sure. M-E-T. You guys, I got a huge list. I mean a huge list. All right. Let's look at Albemarle. Okay, we finished up the year. Are you going to cover in this live? What are we going to cover in this live? Well, we cover dividend investing for weekly cash flow for a safe, secure, predictable 1% per week. Okay, 1% per week comes to at least 50% per year. Age dropped below 6 a share today. Okay. All right, so we ended up the year in December at 145.94. 90 days ago today, okay, 90 days, that's 3 months ago. Okay, so 90 days ago, we were at 121.09, okay? Our 90-day top was on the 1st of March. 2 days later, it was the bottom of the 90-day period. Okay, wait a minute, the top 90-day period is 143.19. 2 days later, you got the bottom at 106.69. Now, the last 30 days. 30 days ago, we started out at 123.73. Okay, went down a little bit, up a little bit, down a little bit, up a little bit, down a little bit, up. It's just, that's what they do. That's what stocks do. They go up, they go down. Up, they go down. Up, they go down. Anyway, we got our 30-day high on the 9th. And that was 133.72. Down a little bit, pull back. Down a little bit, pull back. And then today, we have our 30-day bottom. Here it is, Mike. That's not the 30-day bottom. Today. I don't know. Could it be? There was that possibility that it could have been yesterday. Yeah, but no. All right. You just never know. I see it. What's with United Airlines? UAL. UAL. We'll get to United Airlines. Just give us a few minutes. We got a nice long list to go at. Okay, so people, these are all the stocks you guys rattle off to me, and I take a look at each and every one of them just to give you an idea of what they look like using this strategy. Now, this strategy was created for a 9-year-old little girl. Okay, it's supposed to be safe. It's supposed to be predictable, consistent, no way to lose money. Okay, if you do it right. Okay, do you have a list of all the current holdings? Also, where do you have this list? Interesting question. Jonathan, hi. No, not that high, but hi. Hello. All right. All right, do you have a list of all your current holdings? Yes, I do. All right, now, my list of my current holdings are not that big a deal. I mean, what the heck are my holdings? I have AEO, Albemarle, Bitto, JD, Lowe's, and Macy's in this account. Now, I got 5 different accounts, okay? So, I have one account that's just freaking nuts. Wait a minute. I got 6 accounts now. Damn. All right, anyway. Para after hours popped over 12. Ugh, don't tell me that. I sold a premium for 11. And if I sell it at 11, I lose some money. And I don't want to lose any money. But we'll see. I haven't lost any money yet this year, so maybe I'm due. Maybe Paramount could be it. I just don't know. We won't know until we progress forward. That being said, Albemarle made the bottom today at 110.51. Yes, sir, it did. Well, we'll take a look at Paramount in a little bit. Now, I'm in ALB at 131. I was here a couple of weeks ago asking if you'd short DJT. Would love you to look at the chart now. Okay, however, I don't short stocks. DJT doesn't have 20 years of dividend increases. And I really don't like to say no to people because I can take a look at it, but it's still going to be a no. You know, my opinion really doesn't mean anything because I'm basically a nobody. I just trade for, I look to get a 1% weekly return. And I've been doing that for over 10, 15 years. But I don't look at stocks like DJT, okay, because it's nothing but a waste of time for me. And I don't want to sound mean about it or bad about it, but I like stocks that have 20 years of increased dividends. DJT is not even 10 years old yet. Who even knows if they're even turning a profit yet? And do they even offer what do you call that? Dividends. Okay, they're at $33. Okay. DJT sounds great to short. Well, have at it. Okay, I don't look at stocks like that, and I don't short stocks. Okay, I like things to be on the positive side, you know. All right, back to my list. Today, we're at AMC we looked at yesterday. ET is first on the list tonight. People like Energy Transfer for some strange reason. Okay, so Energy Transfer, 1560. No. Okay, now the reason why I'm saying no, Bitto is on my list. How are you doing today? I'm doing fine. All right, invite Trade She for live. AMD. Okay, you guys are rattling off stuff and you don't realize that we're probably not going to get to them until tomorrow. Okay, because I got a huge list to go through and I only have like 3 hours. Why would you say DJT is right to short? I didn't say that. I said DJT is not on my list and I don't short anything. JC, just cause, yeah. Oh boy, DJT went up 5 points after it fell 34. Okay, how about Walgreens laying people off? Are they in trouble? Well, I really don't know, but we do have Walgreens on the list. No, we didn't. We looked at Walgreens last night. All right, so we'll look at Walgreens again. WBA. We probably won't get to it tonight because I got a huge list to go through. UNG doing well from last week. Added USO, VXX calls. None need to be listed. All right, Jonathan. No, not you. I'm talking about the other guy who said that. Sorry. Well, alrighty then. Are you an options trader? Yes, I am. Well, skip Hertz and insert Duke Energy. DUK. All right, well, let's keep progressing forward. Okay, we're on Energy Transfer. Okay, let's stick to the list. We're on Energy Transfer at the moment. All right, so ET started out a year ago at $12.94. We had a bottom. Can you demonstrate your strategy? That's what we're going to do. Wow, that was a good one. Secretariat, Walgreens is currently giving you trouble. I will stay on course and follow the plan. Well, that's the idea of it. Never buy something you don't want to hold for the long term. Walgreens gives nice premiums every week. I'm up 500 on IGPK. Okay. WBA has been a pain. Okay, I did very well on WBA this year. Okay, I don't know why you're buying it at this moment in time. Okay, WBA, Walgreens. Go back. More. Okay. Okay, WBA doesn't have a dividend this week. Has a dividend on the 18th of May. Okay, that's like 4 weeks away. So I won't be looking at Walgreens again for another 4 weeks, personally, because I only do it 2 weeks before the EX date, and that's going to be at the beginning of May, which is in another 2 weeks. Okay? So let's get back to Energy Transfer. All right, Energy Transfer had a low of the year at 1221, and that was back in the beginning of May. From there, she has slow graduation. Look at it, slow graduation right up to where we were a couple of weeks ago, which is the high of the year. Now, let's look at that high of the year. Okay, 90 days ago, we're here, up, pullback, up, pullback, up, pullback, up, pullback, up, pullback, up. It's going to go up for a little bit. It has a lovely trading pattern. See it? Up, pullback, up, pullback, up, down, up, down, up, down. Awesome. Okay, so the last 30 days right there. I'm up 564 on Meta. Well, good for you. I like Intel, Walgreens, O, Verizon, AbbVie, SQ. I don't know what that is. UPS, Bristol Myers Squibb, and I don't know what the last one is either. So most of those I know. The other ones aren't on my list. I know for a fact O is not on my list. Okay, and OCSL, probably not. Humana, yeah, no. Okay, so 30 days ago, let's stay on track, okay? 30 days ago, we opened up at 1534. A couple of weeks later, we have a 30-day high at 1604. SQ is Block. They own Cash App. Well, then I'm pretty sure they don't have 20 years of increased dividends, so that wouldn't be on my list. Sorry. 2 weeks later, we have a double bottom at 1497. That was yesterday and the day before. Yeah, NU is probably better. All right, so 2 days to the upside. I like 2 days to the upside. You got a 30-day high, come down to a 30-day bottom, 2 days to the upside, perfect time to jump in on Energy Transfer. What do the numbers look like? Well, 1560. We're looking at 1550. We dropped down 10 cents. Yep, that's going to be a no. The number just doesn't work. What do I mean? I can buy it at 1560 tomorrow morning. Okay, the 1550 is going for 19 cents, which is over 1%. However, I'm losing 10 cents right off the top when I buy it, when I sell it. Yeah, so it's no. I only care about all-time high. All right. Oh, I'm sorry. I'm new to what? Hey, what? Let's go back a little bit. I'm new to your channel. I wasn't aware we were doing the dividends. My apology. Well, 10x charting. We're doing right here. If you let's check up the bio, take a look at the. I only invest in stocks that have 10 years or more of increased dividends. 20 years or more of increased dividends. Reason being, if the stock goes down, I want to be reassured that I'm getting higher and higher dividends. So let's say hypothetically I buy Tesla. Okay, fine company, but if the stock goes down, what am I collecting? Nothing. If the stock goes down, I collect nothing. So I only like stocks that have dividends, and especially increased dividends. I care only about the all-time high. Well, good for you. I don't, because I don't want to buy the all-time high. O is Realty Income, monthly consistent dividend payer. Yes, Fritzer, I'm well aware of that. Do you do DRIP? No, I actually spend my money that I make. I think Tesla was downgraded, so they might be a little drop. Chevrolet, how are you? So let me go back to this question. Learn to short and you will care about 52-week lows. No, not really. IP, International Paper, yeah. Okay, Fritzer. Oh, Realty Income. Realty, yeah, whatever. Okay, yeah. They pay dividends on a monthly basis. Okay, fine. However, the numbers just don't work for me. Now, let me explain to you why the numbers don't work for me. Okay. Yahoo Finance. Now, let's go. We're going to go into Yahoo Finance and look into the historical records to find out exactly how much O pays. Okay, now people rattle off OSCHD every single night. They do, and every single night it's no. Okay, but yet they list it anyway. Oh. Okay, quote CL. I'm trying to get, it's not coming up. Why isn't it coming up? It keeps sending me to crude oil. Why the hell is that? It's plain old freaking O. There it is. And here we go. Now we at O. Okay, do we see the numbers here? Okay, just for you guys that are new here and don't know this screen here is being live broadcast on YouTube. Okay, so for those of you on your phone, on your tablet, on your watch, whatever, you're just listening, the numbers on the screen behind me can be viewed on your computer. Okay, that's 10minutetrader.com live broadcast. Now I'm going to go to historical data to find out what the dividends look like for O, because apparently Fritzer likes O. Okay, dividends only. Okay, Fritzer, I got a minor problem with this. Maximum dividends. Okay, interesting. All righty. O started paying dividends in 1994. Okay, that's when they first started paying dividends, 1994. All right, now, 1994, it was 7 cents. 1995, it was 7 cents. 1995, then they moved up to 8 cents. Then they moved up to 8 cents. And 96. The end of 96, back down to 7. Then 97, back up to 8 cents. 99, 8 cents. 2000, 9 cents. 2001, 9 cents. 2002, 9 cents. Part of 2003, 9 cents. Then up to 10 cents in 04. 05, it was 11. 06, it was 12. 07, it was 13. 09, it was 14. 010, it was 14. 11, 14. 12, 14. 2013, she jumped up to 18. 14 was 18. 2015, 18. 2016. This is not, well, it is going up slowly. Okay, but very slowly to 23. Now look at 20. It's been 22, 2019. 2020, it jumped to 23. 21, she jumped to 25. 22, she's still at 25. 23, she's at 26. That's not a huge jump. Okay, so let's take a calculator. 26 multiplied by 12. We're going to give a grand total of $3.12 for the year. Okay, 26 cents per share. $3.12 per share. Now I'm going to divide that by 5202. That's the purchase price. Divide 5202. It comes to a grand total of 5.9%. Do you see my reaction? Doesn't excite me at all. Okay, why would I invest in O if at this moment in time it's only offering me 5.9%? Let's call it 6%. I'll give you the benefit of the doubt and call it 6%. Okay, so O is giving me 6%. Great, fine, dandy. Now, you're new here, Fritzer. Okay, so just to let you know, this trading strategy I'm teaching you was created for a 9-year-old little girl. 9-year-old little girl. Okay, it had to be simple. It had to be safe. It had to be predictable. The income had to be consistent, and there's no way she could possibly lose. Okay, if you have a 9-year-old little girl at home, you know those rules have to be so you don't have any wreak any havoc in the home. Okay, so 5 rules I came up with. Rule number 1, never buy something you don't want to own long term. Rule number 2, never sell at a loss. Rule number 3, make sure it has at least 20 years of consistent increased dividends, year after year, higher and higher dividends. O doesn't have that. Number 4, make sure it has weekly options. Why weekly options? Well, because I don't want monthly income. I want weekly income. Now, and number 5, make sure the numbers work. In this case, the numbers don't work. Why? Well, you saw it right here, 26 cents a share. Okay, it pays every month. 26 cents a share is 12 months in the year. That is $3.12 per share per year. Okay, the current price is $52.02. That comes to a grand total of 6% ROI for the year. 6% for the year. Did you hear that? For the year. Okay, I invest for 1% return per week. Now, there's 52 weeks in a year. So where I went to school, now you have to forgive me because I did not go to college. I am not a college graduate. But I know enough to know that 52% is better than 6%. That's just my humble opinion. 52% is better than 6%. Okay, now I make it consistent 1% per week on average. Okay, now you take a look at my, oh cow, where the heck is it? My trades for the year, okay, which is right up here on my bio page, the10minutetrader.com. And this is my web page right here. I've had it for over 15 years. And here are my trades for the year. Okay, this is my trades for the year. This was last week, 1.2%. The week before, 1.5%. The week before, 1.2%. The week before, 0.9. Well, I don't get it all the time. Oh, the week before, 3.9%. Do you see where I'm getting at? If I'm averaging over 1% per week, why would I invest in a stock that only gives me 6% per year? The numbers just don't add up for me. Okay, let's get back on track and find out some of these other questions. All right, Jonathan, learn to short and you will love and you will care about 52-week lows. Yeah, Jonathan, I don't short. I don't. Do you drip? No, I don't. I take the cash out and I spend it. I think Tesla was downgraded and might do a little drop. It might. I don't do Tesla, so I don't really worry about it. Chevrolet, I said, hello, Dr. Manhattan. Okay, where were we? I missed a lot of these questions. Oh, my God, I missed a lot of these questions. It's a king. I don't know. Why is it dropping like crazy? That I don't know. All right, 1X charting. You like O? Hey, nothing wrong with O at all. You know what I always say to people? If what you're doing works for you and you're happy with it, if you're happy getting 6% a year, fine, stick with it. Okay, this strategy here is for consistent income. I don't look for capital appreciation. I look for it to stay steady, boring 1% per week. Okay. Dow futures down. Okay, I don't do futures on the Dow. If I get corporation active, again, hopefully your advise me on dividends. Well, alrighty then, Mr. Tony. Bitto. Nope. Okay, Martin, why are you saying no to Bitto? Bitto is on my list. I'm actually going to write it down because I'm kind of curious what it did. B-I-T-O. Actually, I do have. Nobody wants to get rich slow. Well, $1 Million Trader Dan, I can't help you out. All right, I'm not looking to get rich. I'm looking to stay comfortable. All right, I'm 60. I don't want to go back to work. I want to stay comfortable. All right, Chris Martin. Yep, he likes that idea too. Austin, what's up? Did you get out? No, I didn't get out of Bitto. I'm keeping Bitto. What are some good dividend stocks? Well, Adriano. There you go, Adriano. I got a bunch of them. I have over 150 stocks that I invest in on a consistent basis. REITs are eating dirt right now, to be honest. All right, Jonathan. Seth, back again. Almost recovered this week. Well, alrighty then. Million dollar trader Dan, 1% per week. Yep, 1% per week. I like 1% per week. It's boring. I do it consistently. All right. Yep. All right. Where are we? Did Israel attack? Don't know. Don't care. Personally, I don't think we belong over there. We have enough issues here on our own land. Why our futures down? Don't know. LMT, Lockheed Martin. We looked at that last night. Does your trading work during a correction? Yes, it does. Tesla 102 could be. Don't know. That was the one that said only like ATHs. I have no idea what ATHs is. Lockheed Martin. We looked at Lockheed Martin last night. All right, and it was a no last night. I forget what the reason was last night, but I'm pretty sure it was. As the best man said, market is a place where impatient people pay the pay. Oh, I like that one. Can you quickly explain how 1% per week? Yep, we'll get there. Hold on. Now, $1 Million Trader Dan, all right, you're new here. Okay, I can tell you're new here because I've been here since January. So I'm relatively new, okay, to this platform of sharing what I know. All right, I'm at that point in my life where I feel obligated to share what I know. Now, I created this strategy for my 9-year-old daughter back in 2008. Actually, I think it was 2007, I think. I don't know. Anyway, when she was 9, okay? I created this for her when she was 9. It had to be simple, safe, predictable, consistent, and no way she could possibly lose. So, with that 5 criteria, I came up with 5 rules. Number 1, never buy something you don't want to hold long term because you just might. Okay? 2, never sell at a loss. 3, 20 years of increased dividends. 4, weekly options, and make sure the numbers work. Okay, now, as I go through it, you will see how it works. Okay, I'm going to be here until 11:30, which is another 2.5 hours. Okay, just relax. I'll get there. All-time high. I have no idea what that means. Oh, ATH, all-time high. Got it. Is Intel on the list for next week? Seth, I don't know. Selling puts? Nope, I don't sell puts. $1 Million Trader Dan. All right, so another reason why I don't like O, okay? It's a monthly optionable stock. What does that mean? That means it only has options once a month. It doesn't have weekly options, okay? KVUE, never heard of it. KVUE. All right, so why don't I like monthlies? Well, here's the reason. Alrighty, now, at this moment in time, all right, this is not my numbers, these are numbers from the market maker. At this moment in time, 52.03 is the purchase price. Next week's earnings are overwhelming. Yeah, but on which stock? Okay, there's a lot of earnings, there's a lot of companies, so we need to be more specific which company you're thinking about. Okay, not every company is having earnings next week. Look good for 60. What looks good for 60? Oh, you mean? All right. Let's give you a for instance. We're on O, all right? Right now, what about Allie? We'll put Allie on there. Galans, how you doing this evening? A-L-L-Y. Okay, so hypothetically speaking, you want it to go to 60. Well, fine, dandy. Will it? Don't know. Call him the dad of Wall Street. Ha, ha, ha. Okay, so at this moment in time, the purchase price, 52.03. If I buy it at 52.03, I can sell somebody the option of buying it from me, 52.50, 90 cents. All right. Now, in order for me to make a profit off that, the stock has to move up to 52.50. Right now, it's at 52.03. Okay, it's not guaranteed that it's going to go up. Strike price in the money is 245. Okay, if I did the 50, which is in the money, okay, I would subtract $2.03 from there. That means I'll only be getting 42 cents. 42 cents is not 1%. So that's a no. So if I go the next strike price out, 90 cents. Okay, but stock has to move up. All right, let's say the stock does move up. I collect 90 cents and another 40. That's $1.30. Okay, so $1.30. Did you buy more lows? No, I didn't. On Tuesday, you bought back the call, then resold immediately. When did you normally do that? Well, I don't normally do that, just when the money goes. Is Pfizer on your list? Yes, it is. Is Bristol Myers Squibb? Yes, it is. You're talking numbers. Can you talk overall strategy? Yeah, hold on. Buy the stock, sell the covered call. That's the strategy. Buy the stock, sell the covered call, collect the premium. The premium's usually 1% or more. In this case, it's not. And in this case, I have to carry that premium for 4 weeks. Okay, it's easy to figure out where a stock's going to be in 4 or 5 days. But 4 weeks? No, that's 20 days. You got it? It is monthly, though, not weekly. Chevrolet, yes, I'm trying to explain why I don't do monthlies. Monthlies just don't pay the 1% per week. So I don't look at monthlies. And O is a monthly. Okay, even though they're paying 6% per year, if you like 6% per year, hey, that's fine. I like 1% per week, but that's me. But you got to buy at least 100. Not necessarily so. Okay, you got to buy 100 to do the calls, the call options. You don't have to do 100 to collect the dividend. Okay, that's why I do dividend investing. Buddy Wally, do you change your approach in a bear market as we currently see? Nope, buddy, I don't. And it's nice to see you again. I haven't heard from you in a while. No, I don't. It's the same strategy because stocks have a tendency to move up. So you're like a high delta or low delta. All right, you're throwing stuff in there that's going to confuse a 9-year-old. This strategy was created for a 9-year-old. I mean, you get 1% a week. You have to sell covered calls, which means you got to have 100 stocks. All right, $1 Million Trader Dan, MTD, MDT. All right, MDTD, whatever. Yeah, MDTD. All right, MDTD. It's not necessarily so. You're looking at buying a stock before the EX date. Okay, 2 weeks before the EX date, stock has a tendency to move up. Okay, so you look at the calendar. Okay, WBA right there, 48 cents. 2 weeks before the EX date is the week of, well, let's go back one. Let's go back. Okay. It is this year right here. Okay. Walgreens, WBA, see it right there? 48-cent dividend on the 16th. If I buy it 2 weeks prior to, that on the 29th. So let's go to January 29th and see what the numbers were. You're not right either. Long call or 100 shares. All right. Mr. Habibi. All right. Just listen to the strategy, okay? Stocks go up before the EX date, 10 days. Okay, we're looking at Walgreens right here, the 16th of February. Okay, now the 16th of February, 2 weeks before the 16th of February, was January 29th. Okay, let's just go over the numbers and see what it looks like. WEA, January 29th. Okay, so here we go, right here. It's January 29th, right there. Opening of the day, 22.85. 22.85. What's the dividend? 48 cents. Okay, so let's grab the calculator. 22.85 plus 48 cents. 0.48 cents. So I have a target, an exit target of 23.33. See it? So let's go back over to the high. Okay. That's 2 weeks before the EX date. Okay. My exit target is 23.33. Didn't make it the first day. Didn't make it the second day. Didn't make it the third day. But I did make it day 4. buy it 10 days before the EX date, add the dividend, that's your exit target. 1, 2, 3, 4. You're out in 4 days with your 48-cent profit, which is 48 cents is equal to the dividend. So, if the stock moves 10 days prior to the EX date equal to the amount of the dividend, how long do you have to be in? Well, in this case, it's 4 days. Now, did you make the 48 cents? Yes, you did. How often does it do that? Well, it does it almost 100% of the time. Do you use volume profile and other strategies or Trader Dan? No. An experience on the follow on equity filing, junk bump by company. Is this a good thing? All right, I'm not quite sure what you mean by that. I love pattern tracing with 200 pips in the mini time frame. Okay. What platform do you use to buy and sell? This is Thinkorswim from Charles Schwab. Okay, so did you see that, Mr. Beeb and what's his name? Trader Dan. Okay, you don't need 100 stocks. You do if you're doing contracts. Okay, if you can buy 100 shares, you're going to sell one contract. That's a covered call. Do you have to do that to take care of the strategy? No, you don't. You just buy it 10 days before the EX date on the Monday. Okay, 2 weeks before on a Monday. You can check almost any stock. Does the exact same thing. Almost every single one. Okay, you buy it before the EX date, 2 weeks. You add the dividend into it, and then use that as a what do you call it? An exit target. Hey, James, can we take a look at Intel? Yep, we can. Sir, you were saying you're making 50 cents a year for 20 years. No, I said I average 1% per week for about 20 years. Yeah, that's what I'm saying. To be a covered call, you get 100 shares or go long. Yeah, that's about right. Okay, the strategy is still sound, no matter how you look at it, but it's always before 10 days before the EX date. Okay, Intel, you say? Intel, INTC. INTC. Okay, what are we looking for here? Yeah, all right. So, a year ago, Intel was at 32.28. The bottom was 28.60. Okay, that was back at the end of May. The high of the year, 51.33. That was the end of December. Okay, the last 90 days, we opened up at 47.03, hit a high at 50.30 a couple of days later. Now, from there, she drops down, goes sideways for a bit, and then drops to find the bottom of the 90-day period. That's called harvesting dividends. Well, it's also called dividend capturing. But here's the question. Does it work? Okay, and can you get a nice 1% per week doing that strategy? Okay, 30 days ago, we opened up at 43.09. The 30-day high was 45.41 2 weeks later. From there, she drops down. The bottom is 35. So, personally, I like to see 2 days to the upside before I jump in. But I love seeing a 30-day high followed by a 30-day low. Keep your eye on that. So once it makes a double green, perfect time to get in. No, a long is not 100 shares unless in the money, then exercise the call. All right, Jonathan, I'm not quite sure what we're talking about. The problem is 1% chance of stock plummeting like a rock. All righty. You have a 1% chance of the stock plummeting as a rock, but you have a 99% chance of it not plummeting. I don't see the problem. Okay? I have what's called, hold on. Historical data. Okay, let's take a look at the historical data for a second. Come on. Wait for it to fill. Yeah, 99% chance is a good thing. 1% chance is good enough to wipe a portfolio. Well, I'm going to disagree with you. Seriously. The reason why I'm going to disagree with you is if they have 1% chance of the stock going down and you have everything in one position, you're doing something wrong. How did you do today? Well, today I did basically the same as I do every day. Only covered if you own 100 shares. All right, you guys are going all over the place with these comments. Then it's not a portfolio. Oh my goodness. Awesome. Thanks, Nathan. How many trades do you do a week? Well, I have 5 different accounts. Okay, the account that I'm sharing here with you at this moment in time has 6 positions. Okay, the other account that I have has 5 positions, another account has 3, another account has like 60 positions, and another account has like 20 positions. How much are you investing for a weekly cash flow, and how much cash flow? Well, Justin, glad you asked. Oops, let's go back here for a second. Here's my account. Here's 2 of my accounts right here. Okay, account number 1. Okay, account number 1, $117,000. It averages over 1% per week. I'm actually up 23.4%, and I've already taken out $14,000 so far this year. Account number 2, $100,000 in cash, $100,000 in margin. Every single trade I've made so far this year is right here. 98% of my trades, 98% of all my money is invested at all times. Okay, this is what I do. This is all I do. Okay, I sit, I do a couple of trades a week. Okay, and then I spend the money that I make. It's pretty easy. Okay, week number 1, 2.12% in this account and 2.38 in the other account. 1.3 here for week 2, 2.5 here. 0.85 over here, 1.43 over here. 0.9 over here, 2.97 over there. 1.03 over here, 2.09 over there. Okay, 1.06 here, 3.02. The numbers are all right there. You want to take a look at the numbers and do the math yourself? Fine, go ahead. Click on the link. Okay. CVS, I bought 1,000 shares on CVS at $79.49. I sold the 79 calls for $102. That's more than 1.5%. General Motors, I bought 1,000 shares at $36.27. I sold the 36.50 calls, made 37 cents a share, well over 1%. LUV, which is LUV, Southwest Airlines, 2,000 shares at $28.96. $28.96. I sold the 29 calls at 39 cents, well over 1%. CMCSA, Comcast, I bought it at $28.96. I sold the 29 calls for 39 cents a share, over 1%. Ford, I bought Ford at $2.31. I sold the 1250s at 8 cents, less than 1%. Okay, fine. Well, check out the numbers. The numbers are there. 2.38% for that week, week number 1. Week number 2, I bought some Lowe's. Oh, imagine that. Lowe's. I bought it at $214. I sold the 212s for $3.05, over 1%. Comcast didn't cash out that week, so I sold for 26. The Ford didn't sell, so I sold at 13. The GM didn't sell, I sold at 40. And then I bought some more GM. I doubled down, 36.49, and I sold those 36.50s for 43 cents, well over 1%. That week I got 2.5%. The numbers are all right there for the whole year. Okay, now the reason why they're there is I'm looking to jump into what's called an incubator fund. I can't use my personal trades as a verification for the theory. It has to be in a prime account that is accessible to third-party, not actuaries, to actually prove that these trades are real. But these trades basically for you guys to see that, yes, these are my trades. Okay, now, if you go here on my website, you'll notice there's a podcast right there. Click on that little button. Here you go. Every single trading day, I list as I am trading. As I am trading, I do every single trade. Okay, there's over 800 of these. Okay, Macy's went crazy. Week 11, Monday, Macy's gapped up nicely with a buyout offer news. Oh, I remember that. How did I play it? Well, they're all right there. Nothing is being hidden from you guys. You don't believe me? Fine, don't believe me. I'm not here to convince anyone. I'm here to create a foundation for my grandson to take over this business when he gets older. He's 4 years old. Okay, I got another 14 years before my grandson's old enough to take over. So yeah, I'm recording everything I do so that he can see what his grandfather did for him. Your most valuable advice is never buy a stock you don't want to hold long term. Thank you, buddy. That's why I tell everyone. Rule number 1, never buy something you don't want to hold long term. Number 2, never sell at a loss. Those two right there, you can't go wrong. Number 3 is a real kicker. Never buy something that doesn't have at least 20 years of increased dividends. Why? Well, because I want to make sure if and when, not if, but when the stock goes down, I'm getting higher and higher dividends on a yearly basis. How long are you out your calls? 5 days. I buy the stock on a Monday and I sell the weeklies, which expire on a Friday. Can't be doing weeklies. Why can't I be doing weeklies? There's 9,500 different stocks in the stock market. Okay, the stock market's been around since 1602. It ain't going anywhere. Options were created in 1973. They've been around for a while. Weeklies have not been around as long, but there's hundreds and hundreds of companies that have weeklies. Weeklies are the way to go. Thanks, Seth, because they are. That's what I use strictly. Okay, out of the 9,500 different stocks, okay, 2 criteria. 2, 20 years of increased dividends and weekly options. 9,500 stocks, that breaks it down to about 200. Yep, SIPs, I do have a mentorship. Wait till hourlies come out. Oh, yeah, no, I wouldn't do that. Okay, I don't want to sit in front of my computer all day. I could sit in front of my computer and make more money, but I have no desire to do that. Okay, I sit in front of my computer about 15, 20 minutes. No, actually about a half hour, because I actually have a trading group every morning and we actually trade together. Okay, so we jump on at 9:15 every morning, okay, and then we're out by 10:15. You ask as many questions as you want. So you're capturing the dividend and selling the covered call? No, I'm only capturing the premium. Okay, the premium is what I'm interested in. If I look at if I look at Intel right now I can buy at $34.93. Okay, the closest strike price is the 35. The 35s is going for $1.38. That's insane. Okay, so at $34.93, if I buy it tomorrow morning, $34.93, I can sell somebody the rights to buy it at $35 and collect $1.38. But here's the thing, you really got to like Intel. I do like Intel, but I wouldn't buy it until it made a double bottom and started to turn around. But that's me. Daily would come first after tri-weekly. Not going to be soon. Just ask Ken Griffin. Yeah, no, I'm not going to do dailies because there are a couple of things you can trade that have daily options on them. Yeah, I looked at them. Yeah, no thanks. Because where's your consistency? Where's your predictability? With dividend stocks, you have predictability. Every 90 days, they pay a dividend. How much money do you have in stocks? Well, I have 5 different accounts. Okay, the accounts that I share with you guys here. Okay, account number 1 has 117,000 in it. Account number 2 has 100,000 in it. Okay, you guys do the math. See the interest that I'm getting? 1.2% on this account over here, 4.4% on this account over here. Okay, the math is really not that difficult. I'm 23. I have 25,000. Is it good? Well, at 23, that's awesome. That's more than my grandson has. Mr. Habib is selling covered calls. Yeah. And conservative, yes. You said never sell at a loss. How can that happen on weekly? The theta could possibly clap Cal. All right, Nathan, awesome question. Okay, Nathan, just to answer your question here. All right, let's take a look at something. Go over here. All right, Nathan, you ready? Each one of these green dots represents a stock. Now, this is Warren Buffett's list, okay? Now, we have Ally Bank, Aon, Wells Fargo, DHI, Siri, Visa, Apple, Capital One Finance, Hewlett-Packard, Kroger, Chevron, Jeffries, Johnson & Johnson, UPS, LPX, Moody's, Bank of America, General Motors, and T-Mobile. That's just for the month of February. Okay, just for the month of February. That's not including January. That's not including March. Now, there's 3 months in a quarter. 3. Okay, January, February, March, quarter 1. April, May, June, quarter 2. July, August, September, quarter 3. October, November, December, quarter 4. We are currently in the second quarter. Okay, the third week of the second quarter. All right, so each one of these companies here pays out a dividend every 90 days. Every 90 days, I'll look at this. Now, before, okay, 2 weeks before the EX date, see a little green dot right there? It says HP. I will buy that, well, I will take a look at it 2 weeks before the EX date. That would be on the 29th. If the numbers work on the 29th, okay, that means I want to look at the high of the year, the low of the year, okay? Where was it a year ago? Where is it today? Well, let's just jump on over and take a look. I'll give you a good example. Okay, here's HP, okay? First thing I want to do is I want to see where's the high of the year? Where's the low of the year? Where was it a year ago? Where is it now? Okay, it's not at the high, it's not at the low, it's somewhere in between. Okay, great. Now what I want to do, I want to look at the last 90 days. That's 3 months ago. Do I want to look at a year ago? No, that's way too far. I want to look at the last 90 days. Okay, that goes to January 18th right there. Okay, 90-day chart. First thing I want to see. Where's the high? Where's the low? Where was it 90 days ago? Where is it now? What is the movement? This is where I want to see what the movement is. She goes up, pulls back. Right here. Goes up again, pulls back again. Goes up again, pulls back. Up, pull back. And then look at the run from the beginning of March to the high of the 90-day period. Okay? You get the high of the 90-day period, that's your indication there's going to be profit taken. And there was, and it just found a bottom 2 days ago. So let's take a look at the 30 days. I received $65 from cash in lieu from corporate actions and fees section. What does that mean? I really don't know. I have to take a look at the rest of the paperwork to come along with it. Okay, the last 30 days, the 18th of March. Here we go. Okay, first thing I want to see. First thing, where's the high? Where's the low? Where was it 30 days ago? Where is it now? Okay, so 30 days ago was the 30-day bottom. Okay, 30-day bottom basically tells you that we, the investors, we think it's too low at this price. So we start buying. Okay, so we start buying. So we start buying until we get to this point here where we, the investors, say, wait a minute, that company's not worth more than that. If the company was worth more than $44, it would go higher. But we, the buyers, we don't think it's worth more than $44. So we stop buying and we start taking our profits. Okay, so we did. We took our profits. Look, 1, 2, 3, 4, 5, 6, 7, 8 days in a row down. Okay, we took all our profits. Now we're here again. Okay, today was an up day, green. Yesterday was a higher high and a higher low. It was a down day yesterday, but it was still a higher high and a higher low. So that's 2 up days in a row. Perfect opportunity to jump into HP. But HP is not on my list this week. It's only on my list 2 weeks before the EX date. Why? Well, because stocks have a tendency to go up before the dividends paid out. Which stock we're on? We're on HP. Helmerich & Payne. It's one of the stocks on Warren Buffett's list. Okay? So, that's what I'm looking for. I'm looking for a recognizable pattern. 30-day bottom. we, the investors, say, wait, that's too cheap. Let's buy some. So we buy it until we, the buyers and sellers, say, wait a minute, that's too much. So we start taking our profits. And we did. And here we are now. Today was a green day, which is good. And yesterday, higher high and higher low. Two great opportunities right there. Now, I want to take a look at seasonality. What is seasonality, you ask? Well, that's taking 10 years worth of charts. Okay, January 1st to December 31st, 2014, 2015, 2016, 2017, 2018, so on and so forth. 10 years worth of charts, one on top of another, to give me the average movement throughout the year. So this is what it does throughout the year. First couple of weeks, it goes sideways, comes up a little bit, pulls back. Comes up a little bit, pulls back. Goes up a little bit, drops, and then goes sideways for the rest of the year. Basically, that's what it does. Blue line represents this year. This represents 10 years worth of data. So I want to zoom in, and I want to see this area right here. The end of April, beginning of May. Why? Well, because we're coming into the end of April and the beginning of May. So here we go. Okay, so we're here now the 18th. The 19th is Friday. 7 more days would be the 26th, and that's right about there. Okay, so what is it going to do for the next couple of weeks? It's going to go sideways. Then next week, it's going to drop. Do I want to be in it when it drops? Now, this is not, this is not guaranteed. This is just historical pattern. What it's done over the last 10 years, this time of year. Okay, fine. Now what do I want to see? So you know what I'm looking for in the charts. There's 4 charts. Okay, 1-year chart, 90-day chart, 30-day chart, seasonality chart. Because I like to get an idea where it goes. All right? All right, so now I want to look at how much money can I make off of it. Well, here's the thing. Ugh, way up over there. Hold on a second. I don't want to twist that far. The last price was $41.17. The bid, $40.61. The ask, $41.62. I can buy it at $41.62. What is the closest strike price? $41.62 would be the 42.50s at $1.20. Okay, that's 3% right there. But here's the problem with that 3%. This is a monthly. Okay, so I got to take that 3% and I got to divide it by 4 because I got to hold it for 4 weeks. That's why I don't do monthlies. If you take 3% and you divide it by 4, you're less than 1% per week. But if you're okay with that on a monthly, fine. Okay, but I don't like monthlies because it's easier to predict where it's going to be in 3 to 5 days than it is in 4 to 5 weeks. How can I learn, sir? Well, good evening, and how are you today? MS Gallant. So we'll take a look at MS. MS. Go back to the chart. I kind of hope that explains everything. Okay, number 1, never buy something you don't want to hold long term. Number 2, never sell at a loss. Okay, number 3, make sure it has 20 years or more of increased dividends. Number 4, make sure it has weekly options because I want weekly cash flow. And number 4, make sure the numbers work. Now, what do I mean by numbers? Nathan, you're welcome. Take a look at this one right here. This is MS, Morgan Stanley. Okay, it's currently at $90.49. Let's go the other way. Okay, $90.40. The 91 is going for 93. That's over 1%. Okay, the 90 is going for $1.43. That's over 1%. I would prefer the 90s because it's already in the money. The stock doesn't have to do squat. Okay, the 91, the stock's got to move up a little bit. Now, would you prefer to make money if the stock doesn't have to do anything? Okay, if it goes up, you make money. If it stays the same, you make money. Even if it comes down a little bit, you're still making money. That's my favorite. Where do we see your current holdings? Chris, right up here. See this where it says my little face right there? And it says Dividend Stock Talk right up there. Okay, you go on there, you go to my bio, and it says the10minutetrader.com. The10minutetrader.com. And I'll go over to here, okay, which is my website, the10minutetrader.com. Investing in dividend stocks up to 50% annual returns. Simple, safe, consistent, and predictable. If you're looking to strike it rich overnight, this ain't it. It ain't. Do you have a course? Yes, I do. I'm working on it. Okay, I have an old one. It's ancient. Where is it? Hold on. No, it's not listed anymore. Okay, the video basically tells you what you do. Another video gives you an idea of what we're doing. Right here, here's the big one you want. Right there, that one. $100 a month, you actually get to talk to me every single day. We have a trading group that meets every morning, 9:15 to 10:15. You actually watch my trades. Okay, right here, podcast. I do a podcast every single morning. Okay, so as I am trading my stock every single morning, here they all are right here. Okay, oh, Kohl's, Walgreens, Comcast this week. Oops, make sure I'm real human. Okay, week 11, Wednesday. I never which direction these are going on. I messed that one up, didn't I? Can't get rich overnight. No, you can't. Are you buying stocks and or trading options? Actually, I'm doing both, Elizabeth cares. Are you using Thinkorswim? Yes, I am. Okay, I have been watching you for weeks now. Well, I hope it makes sense. Love bullish. Yep. Okay, so these are all the podcasts. I do a podcast every single morning. After the podcast, you guys can ask me any questions you want. Okay, that's your best bet. Whoops, let's get out of there. Right here, go to the 10-minute trader. Okay, right there, the 10-minute trader. Come down here, click on this. This will take you to my Patreon page. Okay, where you sign up. Okay, you get 3 different levels. Do you drop free signals? No, I don't. Okay, sorry. Thank you for you're welcome. SCHD, one more drop to 74, then bullish. Okay, Wancraft, I don't do SCHD. It doesn't have weeklies. Sorry. Can you talk more about your strategy at high level? Okay, what do you mean by at a high level? That doesn't make any sense. How long before the dividend date do you buy? 2 weeks. Hello, Corey, back again. Nathan Williams, how many options you typically buy? I don't buy options, I sell options. You got to get the terminology correct, because if you're putting the order in and you're buying the stock and buying the option, yeah, you're going to lose money. You got to get the terminology properly. You're buying the stock, you're selling the option, the covered call. How much capital do I need to start with this strategy? Okay, my grandson started with $50. Okay, but it's a little bit different, a little bit tweak here. I'm here to listen. Again, Corey, you're back again. Nothing wrong with that. Don't see current holdings. Yeah, of course you don't see current holdings, because you're not part of my trading group. I'll put my current holdings on tomorrow. Okay, so people actually pay to be on my trading group to actually see what I trade. Okay, NEE repeat pattern 09 could be. Buy Q. Nope, don't buy Q. Got it. You got it, Chris? All right, so let's get back to the trading and look at some more numbers. Okay, so somebody want to look at Morgan Stanley. Okay, let's see if I can do this here. Let's see if I can learn. Oh, I do. Yeah, that works for me. I don't do FX trading. Buy 100 shares, sell the weekly options. Kind of like that. I'm a part of the trading group and don't see the holdings. Okay, Nicholas, if you're a part of the trading group, okay, if you're part of the trading group, you were on this morning, you saw my holdings. I show my holdings every morning in the trading group. Okay, now I'm going to be on again tomorrow morning. Okay, you can see my positions tomorrow morning. Okay, that's just the way it goes. How much do the trading groups are? It's $100 a month. Okay, does the market need to be bullish in order for your strategy to work? Smitty, no, you just buy a stock that you like. Okay, is 9:15 Eastern Standard Time when you trade? Yeah, because the stock market opens at 9:30. Hey, Papa Jeff saw them. He was there this morning. Okay, you're on my trading group. Okay, in the morning, you see all my trades. Okay, in the 3 accounts that I share with my trading group. I have a couple other accounts I don't share with them because the returns on the other trading strategies I have are well over 100% per year. What about Tesla? Tesla's a no. Tesla does not have dividends. Do you make money more off 100 per month from people from the trading? No, not really. Okay, now the reason why it's $100 per month is because if I gave it to you for free, you wouldn't have any value to it. You wouldn't have any risk there. You wouldn't have no skin in the game. Okay, I do it every single day, regardless of if people are there or not. Really don't care one way or the other. However, I don't want to be disrespected and thinking that, you know, you can just show up and just be there willy-nilly for free. Yeah, no. I want people that are serious and want to be there. And there's an old saying, those who pay attention. Those who pay more attention. Okay, if I gave it to you for free, you'd think it wasn't worth anything. It would have no value. So that's why. So it has nothing to do with the money whatsoever. It's to do with the commitment level that you are portraying to me. Okay. How does dividends play into your strategy? Excellent question. Yep, see your trades every day. Yes, you do, Bo. Bo's there. How much for your strategy to make 100% per year? Actually, you're not invited to the 100% a year one until you do the 50% a year one first for at least 6 months. Okay, so I've been trading for 20 years. I'm in no great hurry. My grandson's going to take over this business when he's 18. He's 4. I got 14 years to go. I'm in no hurry for anything. You have to educate yourself. That's right, Papa Jeff, and that's why we're here. We're here to educate ourselves. Do I trade ICT? What the heck is ICT? I was gonna show someone something who asked for a question. Oh, how do dividends play into the strategy? Okay, right here behind me, this is called an EX dividend calendar. Every single one of these green dots you see represents a company. Okay, let me tell you. Ally Bank, Aon, Wells Fargo, DHI, Siri, Visa, Apple, Capital One Finance, Hewlett Packard, Kroger, Chevron, Jeffries, Johnson & Johnson, UPS, LPX. What is LPX? LPX is Louisiana Pacific Corporation. Okay, Louisiana Pacific. Moody's, Bank of America, General Motors, T-Mobile. This is Warren Buffett's list for the month of February. Okay, now we all know who Warren Buffett is. Every single one of these companies you know of, you may not have heard of Louisiana Pacific. You might not know who DHI is. But all those other ones you know. Okay, you know Wells Fargo. You know who Siri is. You know who Visa is. You know who Apple is. You know who Capital One Finance is. You know what Kroger is. You know what Hewlett Packard is. You know what Chevron is. Okay, all these companies, you know who they are. Where does the dividend play? Each green dot represents the EX date. The EX date is the last day the stock trades before the dividend is paid. So I see that green dot, I go 2 weeks before it. Okay, so Chevron on the 15th, I want to buy it on the Monday, the 29th, 2 weeks before the dividend. Why? Because I want the 1%. I don't care about the dividend. Really, I don't. I want the 1% going into the dividend because stocks have a tendency to go up before the EX date. How much of a strategy? How much for the strategy? Yeah, that's going to be a little bit more. I haven't really figured that one out, but you can't get to that one without going through the first one. Okay, you can't run until you walk. Okay, to educate yourself. Do I understand? I'm not asking for an invite, just wondering how much it is. I haven't figured that one out yet because I haven't got any. I just started this, sharing this kind of stuff and having a class. So I haven't gotten to that point yet. Okay, we have a couple of people that have been in for 2 months because I only started this back in January. So in month number 3 and number 4, I don't know, but I'm just getting to the point where people are in for 2 months so far. So once they get to 6 months, then they'll get the invite, see if they want to join the 100% a month club. It's a totally different strategy. It's a lot more risk, but a lot more reward. Don't expect other people to tell you the way. Everyone would be rich if that happened. Well, that's true. Okay, so I'm here offering you a way for 50% per year. Safe, predictable, consistent. Okay, safe, predictable, consistent. 1% per week. That's over 50% per year. If that's not good enough for you, I can't help you out. Seriously. Okay, blah 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 blah. How did you get WB list? Warner Brothers list? I have no idea. Oh, Warren Buffett's list. Oh, that's easy. Okay, Google. Here we go. Warren Buffett's portfolio, right there. Okay, Warren Buffett's portfolio, right there, Berkshire Hathaway portfolio. Okay, right there, Google, Warren Buffett's portfolio. All right, what do we have? MasterCard, Chevron, Bank of America, Coca-Cola, American Express, Citigroup, Moody's, Aon PLC. I have no idea what that means. Occidental Petroleum, Capital One Finance, Nucor, New Holdings, Snowflake Incorporated. Really? They have a company called Snowflake? Lennar, Kroger, Hewlett Packard. Okay, a whole bunch more. Okay, Google. It answers all your questions. Let's go back to where we were. Okay, Papa Jeff. How long you been in? Papa Jeff is relatively new. Is a $25 a month a good place to start, or do you recommend it? Okay, the $25 a month, you don't get Mondays and you don't get Fridays. Mondays and Fridays are the most important days. Why? Because that's when we do all our trading. We do our trading on Monday, and on Friday we do our balancing. Okay, where are we? What do we need to do to set us up to be back into cash on Monday? Okay, the $25 a week, you get the the after effect. Okay, you get to see Wednesdays and Thursdays. Sometimes you get to see Tuesdays. Okay, but if you want to be live while the trading is being done, it's the $100 a month. MS was me. Squirrel. Gallant, you're right. So, do you sell an option and collect the premium and the dividend? I don't really go for the dividend because, as everybody knows, stocks have a tendency to go down on the EX date because the very next day the dividend's paid out and the stock has a tendency to go down. I don't want to carry it into the dividend. I will if I have to, but I don't want to. I want the 2 weeks before. I want my 1%. See, here we are at Kroger on the 14th. I'll jump in on the 29th. If I get my 1% this week, fine, I'll get out. If I carried it to this week, I'll try it again, and I'll try to get out. If I have to carry the third week, which I don't want to, do you share what you trade after joining? Do you share what you trade after joining a team, sir? Well, after you join the team, you get to see my whole holding account. Okay, we actually do a Zoom call, and you see my trading account. You see the trades that I'm making. Okay, you see what I'm buying it at. You see me do the mathematics. Okay, then you can ask whatever question you want. So, wait, James, I didn't understand that. Can you go over that one more time? Yeah, not a problem. That's what I'm here for. Okay, I'm at that point in my life where I want to share what I know. I want to help people out. So that's your question. Yeah, that answers your question. You get to see exactly what I'm doing. Hey, Chris, the market for 20 years. This strategy only a month. Yep. Okay. What are the options to get back into cash on Friday if your option doesn't execute? Well, that's what we figure out on Friday afternoon. That's what people pay for. They pay for that kind of knowledge. Okay, I can't answer the question for tomorrow afternoon because we're not in tomorrow afternoon. Because tomorrow morning, all the numbers are going to change. Tomorrow afternoon, I have no idea what the numbers are going to be. Okay, now, I do know, I can take a look at what I got in at. Okay, I know what I bought my stock for, and I know what I sold the option for. What I don't know is where's the stock right now. And I won't know that until 3 o'clock tomorrow afternoon. If I can't make the 9:15 trading, is there another option to watch it? Yeah, I record the sessions, and then I will send you a copy of the recording because it's recorded in the Zoom call. How many paid members? I have enough. All right. Let's get back to some trades. All right, Chris, Mike 5. The strategy has been used forever. I just simplified. I wouldn't say forever. I mean, dividend capturing has been around for over 400 years. I mean, people buy the stock, collect the dividend, and then they sell the stock. Market crashed just now. Well, alrighty then. Kill him nicely. How you doing? I haven't seen you. I didn't see you the last couple of days. Kill him nicely. All right. So, that being said, let's get back to the list. Walmart, WMT. Walmart's usually a no. We'll take a look. No crash. No halts yet. WMT. Wally World. Wally World. 59. 59.39. Yeah. Take 39 off of that. It's going to be a no. Walmart's going to be a no. How can I join the team? Rains. Okay, Rains, are you ready? Whoops, you don't want to go there. That's that. Right here. Go to the10minutetrader.com. See that? The10minutetrader.com. You slide down like this. Whoops. Slide down, and you get to this signal right there. Try trading live online. Right there, you click on that, and that will take you to the Patreon, Dividend Stock Talk. Or you can just go to Dividend Stock Talk Patreon, or Patreon/Dividend Stock Talk. Just as long as you get to there, you see my pretty little smiling face. Because I want to see my smiling face on the cover of the Rolling Stone. Who remembers that song? Rolling Stone, gonna see my picture on the cover. Gonna buy 5 copies for my mother. Gonna see my smiling face on the cover. Yeah, I know it's backwards. Just got followed by a fake version of your account. Well, yeah, I should let you know. I should let you guys know. There are 22. I counted them on Monday. As of Monday, there are 22 people pretending to be me. So when I say to you, and you're listening to me, if you really want to talk to me, okay, you really want to get started, send me your phone number. I will give you a call. You can ask the people in the chat right here if I call or not. Mikey G, I don't look at futures. It's not easy being James. Actually, it kind of is. You know, I get up early in the morning, like sometimes 3 or 4 in the morning. I have too much brain activity. Get up, write stuff down, and then I make breakfast for the wife. I do my podcast, and then I go back to sleep because it's too cold for me to go outside. But they're good. Yep. He does call. Yep, Papa Jeff. I called Papa Jeff. Halt. Isn't it till 6? And now it's 12 over an hour, 4 foot. I have no idea. How cold is it? Well, it's chilly enough where I can't be out in shorts. I'm just south of Boston at the moment. Stocks crashing tonight. Well, Para is up almost 10% after close. Yeah, we'll take a look at that in the morning. I need this correction. I'm short market. Mikey G, I don't short. Okay, don't get me wrong. You can make more money shorting than you can buying. Why? Well, because it takes longer to build a building than it does to burn it down. That's the analogy I was giving. You know, you have bulls going up the stairs, bears jumping out the window. Please, can you repeat the name of your website and take it slow? Oh, Rains, are you ready? The, T-H-E, the 10-minute trader. The 10-minute trader. The Asia doesn't open for another 2 hours. They're just adjusting for Bitcoin halving. Oh, yeah, that's today. Cool. Mikey G, be careful of Black Swan. Yeah, you can be careful of Black Swans. You can never tell when they're coming up. They just pop up and boom, there they go. Oh, there it is. Ooh, all right, stocks crashing on some BS explosion that somehow no one can confirm. Probably green tomorrow. Israel attacks ISIS in Iran. Okay, I did ask you to hedge. Okay, fine. All right. Now, you guys make it seem, who's chatting at this moment, that the U.S. hasn't seen this kind of crap before. Okay, so let me just give you a brief little history. Yeah, okay, I'll give you a brief little history, okay? The U.S. stock market has seen a 10% increase over the last 100 years every single year. 10% increase on average over the last 100 years, okay? What's happened in the last 100 years? Well, you have Coca-Cola, Procter & Gamble, Colgate, Palmolive, Clorox, Procter & Gamble, Ford, General Motors, Bank of America, Wells Fargo. I can go on and on and on. There's over a couple of hundred companies that have been in business for over 100 years. What does that mean? Well, that means they've seen World War I, they've seen World War II, they've seen Korea, Vietnam, the stock market crash, the Great Depression, the oil embargo in the 70s, the dot-com bust, the Y2K, the financial, what do you call it, the financial crash, okay, Iraq, Iran, Afghanistan, the pandemic, and yet they still increase their dividends every single year. Oh, I forgot 9/11. Thank you. They've seen all this crap, decades upon decades upon decades of crap that the economy throws at them. Yet, you and me, neighbors, friends, relatives, all get up first thing in the morning and they all go to work. Why? Because what else are we going to do? We go to work. Yep, Ukraine, yep, that's here too. Yet the stock market, the stock market's, well, I can't say it's irrelevant, I would like to, but even if, okay, so Iran blew up Iraq, Iraq blew up Israel, whatever's going on over there, okay, not that, I don't want to make it sound petty or anything like that, but are you not going to go to work tomorrow because Iran bombed Israel? No, you're probably going to go back to work tomorrow. Why? Because you're on the other side of the damn planet. They're thousands of miles away. What's happening over there has nothing to do with you and I. Okay? I will be back on tomorrow morning doing this exact same thing. And yeah, the news may affect the charts. But that's just news. That's got nothing to do with the company itself. Why? Because the company's not in Iran. The company's not in Israel. The company is here in the United States. Yeah, you need to fill up your car. Good day to buy. Well, you know what? It is what it is. Was Morgan Stanley a yes? I don't know. It affects the oil prices. Yeah? What do you think? We've never had oil problems before? Do you remember the 1970s where it was like a quarter of a mile of cars waiting to get gas to go to work? Okay, we have issues. We have problems. Yeah, you deal with the problem, fill up your car, and you go to work. You're not going to stop working because the gas goes up a couple of pennies. Did you see gas? I paid $4.75 a gallon once, okay? And I had a double tank on my truck. A double tank on my truck at $4.75 a gallon. That was freaking nuts. But you know what? I filled it up, I bitched, I moaned, and I went to work. Okay, I don't see what the issue is here. And hence, it affects us. Yeah, it does. But we still go to work. We still go to work at Walmart. We still go to work at ExxonMobil. We still go to work at Hewlett-Packard. We still go to work at Microsoft. We still go to work at Twitter. All these places. We still go to work regardless of what happens. Okay? The economy still keeps moving. Economic pie isn't getting bigger, but the stock market keeps climbing. Yeah, are you not working from home? Well, I don't work anymore. I'm retired. I work when I feel like it. If you trade, you go to work harder. No, not necessarily so. I just look at companies that have been in business for, over 100 years and have increased their dividends for more than 20 years consecutively. Okay, because the last 20 years, we've seen a lot of crap. All right? We've seen when Trump was in office, the gas was below $2. Okay, now Biden's in office, gas is above $3. But we're still going to work. Got sneak preview live your trade in TikTok before I want to join. Okay. Got sneak preview live your trade in TikTok before I want to join. Okay, whatever. I honestly don't know what that means. Why is AI and dud at stock predictions? That I can't tell you. Because I have no idea what you're talking about. Okay, I don't trust computers. I write shit down. I do. Okay, I'm a little bit older than you. I'm assuming I'm older than you. More times than I like to remember have I hit a button, everything disappear. Yeah, no thanks. I'll write the shit down. But moved it all day into bonds. Okay, if you want to get bond returns, that's fine. I follow you. You make 1% a week. The market was awesome. Blah, blah, blah. Hold on a second. Made 60,000 pounds in 4 months. Well, that's awesome. Good for you. What stock do you recommend for beginners? I don't recommend anything. I recommend you doing your research. Never buy something you don't want to hold a long time. All right, did we finish up with MS? No, we didn't. Let's go back to it. May I ask you what your profession was? I used to own a manufacturing company. I used to manufacture stuff. Right? Before that, I was a waiter. Before that, I was in the armed services. Anything digital can fail and then everything is gone. Yep, probably. But Warren Buffett's economics are a thing of the past. No, not really. I'm going to have to disagree with you. What was your percent in profit in 2021? It was over 60%. I did bonds last week for the cash. Just an ad on 3 biggest ones. All right, I'm pretty sure bonds don't offer you 50% return. Now, I get it. We're going to have issues. Yeah. But can any of you here, there's 140, about 140 people here. Can any of you here tell me with conviction in which I would believe that Coca-Cola is not going to make Coca-Cola another 5 or 10 years? U.S. Treasury returning 3.72. Yeah, that's for a year. Yeah, no thanks. Okay, I do that in a month. Why would I want to do that in a year? Explain Tesla market cap. Okay, I don't do Tesla. Tesla does not pay dividends. That way, I don't even look at it. Where are your morning podcasts located? Any podcasting service. How much would you recommend starting with? Whatever you're comfortable with, Matt. Okay, this is an investment. You're buying a stock. Okay, you're buying a company, ExxonMobil, Procter & Gamble, British Petroleum, Chevron, Nike, Hewlett-Packard, Dunkin' Donuts, Starbucks. Any company you want to buy and hold for a long period of time. You just take all those companies, put them in a little bundle, and then you trade them one after another. You grab a 1% per week, you say thank you, and you move on to the next one. Okay? You're still buying Apple, Occidental Petroleum, all those companies. If you typed your password in Google Docs, then Google Docs shut down, you'd lose your password. Yeah, that's why I write them down in a book. Do you ever use a caller? Not in this. Okay, Reggie, yeah, I do, but not here in this strategy. In this trading platform here, in this account, I like to stick to just the basics. Okay, because I don't want to be one of those people who say, yeah, you'll do this, and then me not do it. No, this account here is strictly covered calls with dividend stocks. BlackRock mentioned tokenize. Are you ready? Made any changes? Prepare your trade. Okay. Yeah, I understand digital currency is going to show up. However, here's the thing. Now, do you remember when they got rid of all the European currencies and went to the euro? Who stood their ground and said, oh, hell no? The Brits. The Brits said, hell no. We've been using the pound, the pence, the shilling, whatever the hell they call it over there. We're not giving it up. We Americans, we can do the exact same thing. Here's the thing. Okay, this is just, I heard this the other day, and it makes total sense. Hypothetically speaking, you get a tokenized dollar, a digital dollar, okay? Now, let's say we get 2 people, Bill and Jim. Jim uses cash. Bill uses digital. All right, so here's the thing. If I, Jim, take a $50 bill, go to the gas station and buy $50 worth of gas, how much money does the gas station owner get from me? $50. He can now take that $50 bill and go to the grocery store and buy $50 worth of groceries. What does he get? $50 in groceries. What does the grocery store owner get? A $50 bill. The grocery store owner can now take that $50 bill and he can go pay his gardener $50. Okay, and the gardener gets $50. That $50 bill will continue to hold its value from one person to the next person to the next person to the next person. Now let's take a look at Mr. Bill. Mr. Bill takes his credit card or his debit card and he goes and buys $50 worth of gas. How much does the gas store owner get? He does not get $50. He gets $49.75. He just got shortchanged. Now he takes that $49.75, and he goes buy some groceries. Okay, now, does the grocery store only get $49.75? No, he gets $49.50. Okay, when he takes that and he pays his lawnmower guy, the lawn dude, to pay it, does he get $49.50? No, he gets $49.25. So the more you use, the more that circulated digital currency goes down the line, the end person doesn't get $50 anymore. However, a $50 bill in cash keeps its value from one person to the next person to the next person to the next person to the next person. Okay, once I got that, I said, holy shit, everybody's being cheated with the digital currency. So I'm going to use cash as often as I can. Hopefully that makes sense. Yeah, they're going to try to get us to go to digital. However, the Brits said, hell no to the pound. Hell no, we don't. All right, sorry. Hell no, we don't want to get rid of our pound. They didn't want to go to the euro. They wanted to keep their currency. So we can, if we want, keep our currency. Because you're not going to wipe out the US dollar that quick. It just ain't. It's way too spread out over the world. All right, enough of that. Hence why paper is better. Exactly. OFC, I was doing it in a day, but tomorrow the index is going to shits. Okay. Chris, coal will make Coke, but stock will be $5. Okay. All right, so here's an interesting question, Chris. Let's say, hypothetically speaking, you're right. The stock drops to $5. Now, Coca-Cola has been paying out a dividend to its investors and increasing the dividend every single year. Every single year, higher and higher and higher dividends. So let's say I got to find what the dividend is. Okay. So the dividend for Coca-Cola is 48 cents. So go with me here for a second. If I buy Coca-Cola at the high of the year, right here, the high of the year, that is $64.99. Do I still get 48 cents a share? Yes, I do. Now, what happens if I buy Coca-Cola at the bottom of the year, 51 cents a share? Do I still get 48 cents a share? Yes, I do. The dividend, all right, the stock price, has nothing to do with the dividend that I collect. Okay, whether I buy at the high of the year or the low of the year, I'm still getting 48 cents per share, regardless of what the stock price is. Okay, so if the stock price drops down to $5 and they consistently increase every single year, I'm still getting 48 cents a share. Right over here, 48 cents a share. That's why I only buy stocks that increase their dividends every single year, regardless of what happens to the stock price. Okay, now Coca-Cola has been increasing for over 50 years, every single year. Okay, they've seen all the wars, they've seen all the economic downturns, they've even seen the changing of currencies. Okay, they've seen a lot of shit, and they're still making Coca-Cola. I have no idea if they're becoming more manic. All right, hold on. I'm missing some stuff. By the time it gets to Gardner, the U.S. government has done, yeah, reduce it to $5. Probably. But now that you know that, now that you're thinking of that, if I take a $50 bill and I use a $50 bill rather than a debit card, every person I give that $50 bill, as long as that $50 bill keeps going from one person to the next, to the next, to the next, everybody's getting their fair share. But once you go to digital, someone down the line is losing out. And are they losing out? No, they're not. They're going to raise their price. Wait a minute. If this guy's getting $50 worth of gas, but I'm only getting $49.75, I'm going to raise my gas prices up. Because when he gets $50 worth of gas, I still want to get $50. So now I have to pay more for the gas so that he can get his $50. That makes sense? Okay, and if he's doing it, so is the baker. So is the gardener. So is the accountant. So is the doctor. So is the lawyer. Everybody's raising their price because they're getting screwed just a tiny bit from the bankers, because they all want that slice of that pie. As soon as you use that debit card or that credit card, it's coming out of someone's pocket. How do you find stocks increasing dividends for the past 20 years? Big Cat, good question. I'm going to answer to you really quickly. You ready? Google. Let me say it again in case you missed it the first time. Google. Dividend Kings. 50 years of increased dividends. Dividend Aristocrats. 25 years of increased dividends. Dividend Challengers. 25 years of increased dividends. Okay? Warren Buffett's list. Those are four lists that I use. That's over 200 stocks to look at. Parashika. Well, good evening to you. All right, 86. Thanks for that. Can the dividend cover? I'm doing excellent. Thank you for asking. Can the dividend cover for the stock price drops? No. Killam, I'm not quite. Can you ask that question again, Killam? I not quite understand what you're saying there. Can the dividend cover for the stock price drops? I have no idea what that means. Parashnika. Is that right? Parishnika? That sounds like a lovely name. How am I doing? I am doing lovely. Thank you. It's 11 o'clock. We got a half hour to go. Oh, I got a couple more people over here on Instagram. Yay! Instagram is coming alive with people out there. Really got to do something about the questions over on Instagram, because I see people popping up, but they can't ask questions. Thanks. You're welcome, my dear. It's very nice for you to follow along, and hopefully you're learning something. This is the first time I've seen you here. Now, so nobody can tell me whether or not Coca-Cola is going to stop making Coca-Cola. I mean, they've been doing it for over 100 years. Chach Sabag. Yo! Are you buying just weekly covered calls or buying the stocks and selling options against those? All right, Matt. I'm doing covered calls. I buy the stock, I sell the option against it. That becomes a covered call. It gives me a safe, predictable, consistent 1% per week. Yes, today is my first time seeing you. Well, I am privileged. Thank you for sharing your time with me. They did stop putting the good stuff in it. Yes, they did. Ennis Template. Hi, hello to you. Matt in Sonoma. Well, hello there, Matt. Chachbag. Okay. Google has given a dividend. How long? I don't think Google has given a dividend. More and more of the economic growth is coming from rent dividends rather than innovation. Well, what is your opinion on XRP? I don't do coins, sorry. Do you recommend option trading? Yes, I do. What's wrong with the market? Why is it going down? Stock market always goes up and goes down. Did we finish Morgan Stanley for Galant? No, we didn't. What's wrong with the market? Decker Outdoor Stock Thoughts. Let's go back to Morgan Stanley. All right. Sorry about that, Galant. Here we go. Back to Morgan Stanley. Let's finish up with Morgan Stanley, okay? Morgan Stanley, 89.31 a year ago. The top for the year was 95.63, and that was the end of July. Whoops. Okay, the end of October, we saw the bottom of the year, 69.42. Which platform I trade with? Think or Swim with Charles Schwab. Okay, now, the bottom of the year was at the end of October. We finished out the year in December, end of December, 93.76. The last 90 days, okay? The last 90 days, here we go. The high, the low, where was it? Where is it? Okay? 3 months ago, or 90 days ago, we opened up at 84.83. Okay? The bottom was the middle of February. Okay, that was 8309. How is it going? What coin do you trade with? I don't do any coins whatsoever, my dear. Only dividend stocks. Sorry to burst your bubble. All right. So the 13th of February was the bottom of the year. I mean, of the 90-day period. Let's look at the last 30 days. Last 30 days, right here. 30 days ago. What do I think about TSMC? I don't. That was quick, wasn't it? 30 days ago, we opened up at 88.36. Now we have a double 30-day high. Interesting. Okay, we hit 94.73 on the 28th of March, and we hit 94.74 on the 4th of April. Okay? So this is what you want to call resistance. It doesn't seem to want to go higher than the 95. Okay? If it was worth more than 95, it would have went up to 95. But it got to 95, and we, the buyers and sellers, said, wait a minute, that ain't working. Okay? Now, from there, we drop down to the 30-day bottom, 85.03, right over here. Look at the run-up we had. 1, 2, 3, 4, 5. 5 days to the top side. Look where the 30-day top is. It's still a good opportunity for more escalation. 30-day bottom here, 30-day top here. This is where we are now in an upward trend. Okay? Do you use Telegram or WhatsApp? No, I do not. If market is efficient, I still don't understand 1% a week. Wow. All right, Morgan. All right, $1 million trade. Okay, what was it? MDTD. You ready? MDTD. All right. I like where it was. It goes up. It pulls back. Now it's going up again. We can agree on that, right? All right. Next, I want to take a look at the seasonality. Why? Well, because I want an idea what the thing normally does. What does it normally do on a yearly basis? Well, look at that. It basically goes sideways. No big moves to the upside, no big moves to the downside. Great. I love sideways. Sideways is great. Now, pay attention closely. Okay? Pay attention closely. Because it might get a little tricky here. All right, here's where it might get tricky. You ready? All right, MDTD, you ready for this? This is where it gets tricky. Last trade, 90.26. Can't argue with that with me because it is what it is. The bid, 89.15. The ask, 90.49. Okay? 90.49. You're reading that properly? If I want to buy it tomorrow morning, I am paying $90.49 per share. First thing tomorrow morning, 9:30. Buying it at $90.49. I wonder if you understand that properly. $90.49. Okay? Now, if I'm going to sell a covered call against it, which one do I want to sell? I want to sell the $90 one. What am I going to get for that? I am going to get $1.43. So here's where it gets a little difficult. Okay, I'm going to grab my calculator. Okay, now, if I'm selling the $90 strike price, means I'm selling somebody the right to buy it from me anytime between when I buy it, when I buy the stock, I sell the covered call, they collect it, they have the right to buy it from me anytime they want between Monday morning and Friday afternoon. That's the time frame. That's the contract. And they're paying $1.43 per share. Oh, if the stock goes up to 85, it stays there for 2. All right, no. Stop jumping forward. Just sit tight, listen to the numbers. Purchase price, $90.49. I'm selling someone the right to buy it from me at $90. I'm losing 49 cents right off the top. Correct? Now, if I'm collecting $1.43, right? Okay, do you see it right there? What I can buy it for, what I can sell it for. I can sell it for $1.43. Now I'm going to subtract the 49 cents that I lost. Okay, because remember, I'm buying it for $90.49. I'm selling it for $90. I'm selling it for less than I paid for it. Do you see that? Selling it for less than I paid for it. Okay, now that comes to a grand total of 94 cents. See it? 94 cents is my profit. Now I take that 94 cents and I divide it by what I paid for the stock. $90. Not the $90.49 because I already subtracted the 49 cents out of the premium that I'm collecting. Okay, that comes to a grand total of, oops, I did it wrong. Hold on a second. Clear. 94 cents divided by $90 comes to a grand total of 1.04%. Okay, you're missing the point here, $1 Million Dan, all right? Never buy a stock you do not want to hold long term. That's number one. Number two, never sell for a loss. Number three, you're missing the point where we're only buying these stocks. Wait, which one are we looking at? MS? Morgan Stanley. Morgan Stanley has its dividend right here on the 29th. We're only buying the stock before the EX date because stocks have a tendency to go up before the EX date. So let's go back to this example. Okay, it's at $90.49 at this moment in time. If I buy it, sell the option at 90, okay, I collect 1%. Now, if the stock goes up, I make the 1%. If the stock doesn't move at all, stays at $90.49, I make my 1%. The stock can even drop down a little bit. As long as it stays above $90 Friday afternoon at 4 o'clock, I will still make my 1%. Now, I will not buy the stock. Okay. Now, we went, and the reason why I look at the charts, first thing I want to see, where's the high? Where's the low? Where was it a year ago? Where is it now? And are there any patterns, distinct patterns? There are. It goes up, it pulls back. It goes up, it pulls back. It goes up, it pulls back. Consistently. There's no erratic behavior in that chart. All right, now let's go to the 90-day chart. Okay, here's the 90-day chart. It goes down, it goes up. It goes down, it goes up. No erratic behavior anywhere. Okay, now I look at the 30 days. It goes up, it pulls back. 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 It goes up. It's in an uptrend at this moment in time. I like the 1-year chart. I like the 90-day chart. I like the 30-day chart. I like the seasonality chart. And the numbers work. I can't get any better than that. And the dividend's coming up in a couple of weeks. Not quite sure if you get all that. Hey, LA, how's it going? What if you bought Heinz like Buffett did and it continued to drop? Okay, all right, MDTD, you're not paying attention. I'm not talking about Heinz. I'm talking about Morgan Stanley. Heinz is a totally different subject. We're not talking about that at the moment. We're talking about a stock that has its dividend coming up in a couple of weeks. Dividend stocks, specifically the dividend stocks on my list, I've been doing this for years, have a tendency to go up before the dividend date. Stocks move for two reasons and two reasons only. Don't let anyone fool you, okay? A known reason and an unknown reason. A known reason you can create a trading strategy for. An unknown reason you cannot. What is an unknown reason? An unknown reason is an earthquake happening and swallowing up a factory. Can't plan for that. A tidal wave coming in and taking out a company. Can't plan for that. ExxonMobil had the Exxon Valdez go down and spill all that oil. You can't plan for that. British Petroleum, the spill in the Gulf. Can't plan for that. The death of an important person. When Steve Jobs died, you can't plan for that. Major lawsuits, you can't plan for those. That's an unknown event. Now, a known event, Something you know is going to happen that you can plan for. Earnings, dividends, stock splits, new product introductions. What else? Oh, seasonality. Why does Weight Watchers go up the first of the year? Well, why do you think? Why does Hershey stocks go up at the beginning of February? Why do you think? Why do oil stocks go up in March and April? Why do you think? Why do gas stocks go up in July? Why do you think? Certain stocks happen on a certain time that can be planned for, that you can make arrangements. Oh, wait a minute, they have the dividend coming up. Let's see what happens. Stocks have a tendency to go up just before the dividend. And I don't know why you want to argue that fact. It's fact. You just can't. I don't know why you want to argue it. If the numbers are there, if it does it 10 years in a row, more than likely it's going to do it year 11. Okay, pork bellies go up every time, the exact same time, every year for over 45 years. Take a look at the charts. They also go down the exact same time every single year. Take a look at the charts. Charts don't lie. Numbers don't lie. The high of the year is the high of the year. You can't argue with that. The low of the year is the low of the year. Well, we'll look at a 30-day period. But the low of the 30-day period is the low of the 30-day period. If it was going to go lower, it would. It is you and I. We decide, well, wait a minute, that's too low. Let me buy some. And then we buy it, and it goes up. And it gets to a certain point. We said, wait. It's not worth 95 bucks. Hell no. And then we take our profits, and it goes down. I don't know why you want to argue. I really don't. Stocks go up, stocks go down. Now, this particular position, okay, at the $90 strike price, if the stock goes up, I make my 1%. If the stock stays the exact same all week, I make my 1%. If the stock goes down a little bit, I still make my 1%. I don't see why you can't grasp that. This strategy was created for a 9-year-old little girl. You're over the age of 9. You should be able to grasp it. Never buy a stock you don't want to hold long term. That should answer all questions right there. Never buy a stock you don't want to hold long term. Second, never sell at a loss. That's pretty elementary. If I'm paying $90.49 for it, why would I ever sell it for less? Okay? Number 3, 20 years or more of increased dividends. Does Morgan Stanley have 20 years or more of increased dividends? Does Morgan Stanley have weekly options? Rule number 5, make sure the numbers work. Well, the 1-year chart looked fine, 90-day chart looked fine, 30-day chart looked fine, the seasonality chart looks fine. 1, 2, 3, 4. And look, if I buy it now, sell this option, I make my 1%. I don't know why you want to make it any more complicated than it already is. Let's move on. Hello, nighty people. LA Soundwave, how you doing, man? Was only able to get here now. Damn truck broke down. Hey, dude, when I got out of high school, I had a truck, 1971 Ford F100. I had that thing for 13 years. Can you explain what happened to a stick if it gaps in either direction? I have no idea what a stick is. Gaps in either directions. And oh, that's just the market maker. You're talking about a stock gapping up or down. That's just the market maker reacting to news. That's all that is. Yeah, I get that. What questions did I miss? Called the way on Wednesday. Do you roll your options? Sometimes I do, sometimes I don't. Right, Jan, that is much more risky. What do you think of Amazon? I don't do Amazon. They don't pay dividends. What happens if it goes below 90? Well, if Morgan Stanley goes below 90, I just take it into next week. Remember, rule number 1, never buy something you don't plan on holding long term. Okay, if I buy it at 90.49 and it goes below 90, let's say it's 89.99. That's below 90. I take that stock into next week, and then I look at what does that week's $90 premium sell for. At this moment in time, it's selling for $1.65, which is well over 1%. Okay, I always take a look at the numbers on Monday when I buy, on Friday when I close out that position or that position is getting to that point. When you have that stock going, blah, blah, blah. Okay. All right. When buying options, how many weeks? All right, Alan, I don't buy options. Okay, whenever you guys play this game, you really get the terminology correct. I buy the stock. I own the stock. I sell the option against the position that I have. That is called a covered call. I do not buy options. Buying an options, you're making the assumption that the stock is going to move up. Okay, that's not what I'm looking for. I'm looking for consistent cash flow, predicting that time is going to keep ticking. There's only one constant in this whole game, and that constant is time. Time, tick, tock, tick, tock, tick, tock. You can't stop it. So if I'm selling time, which is basically what I'm doing, Monday morning, I sell an option. The person has the right to buy it from Monday morning until Friday afternoon. That's it. From the time he buys it, the time I accept that money, tick tock, time ticks away. Friday afternoon, 3:59 is his last opportunity to do something with that option. If he does something, great. If he doesn't, well, oh well. I'm selling time. That's it. MDTD, trading with $1 million, huh? I bet. Anyway. Do you buy calls? I don't buy calls. I buy the stock. Thank you. You're welcome. MDTD. 25K only. Okay. So 25K should give you hypothetically $250 a week. That's $1,000 a month. Hypothetically speaking. Okay, thanks. Use Alley as another example. All right, Gallants, we got one more to do. This has been a fantastic explanation. Well, I'm glad you like it. I have to research covered calls. Okay, Nathan, covered calls are simple. It is the safest trading strategy there is. However, you do have to qualify to be able to do option trading, because it is option trading. It is the simplest option trading there is, because you're buying the stock. You actually own the stock. So there's really no risk to the covered call unless you do it incorrectly. Synthetic call, deep in the money. Chris, yep, I know what you're getting at. We're not going to talk about that one, Chris, because that's not what we're covering here. We only are careful with choice to ensure we have cash flow to continue trading weekly for the 1%. Yep. Do you have to buy 100 shares of stock? Well, there's a lot of different trading strategies you can. Now, if you don't have the money for 100 shares of stock, there are other trading strategies you can use using this ideology, okay, where the stock moves up before the EX date. Okay, that's a little bit more involved. Would this still work? I'm not quite sure, because I don't know what you're talking about. Leafyuko? All right. Hey, Florida gal. Florida Mikey. All righty. Would it still work? All right. That being said, let's take a look at one more for the evening, because we are at 9:23. Hey, Florida gal, how are you doing today? Yep, synthetic call is an advanced play. You got that right. Buy the stock, selling the call is a strategy. That's exactly right, Wade. But you've been here long enough. Just watching. Way to go, Mikey. Florida Mikey. Where are you from, Florida Mikey? I'm from the Sarasota, Bradenton area. On the west coast, where the water is warm and cozy. Uh-oh, someone's coming out to say hi. Anthony. All right, so let's do one more, and that'll be it for the night. Clearwater Beach. Ooh, I used to live off of Drew Street, 921 Drew Street, many years ago. Big, beautiful house built in the 1920s. Two-story wooden house. Ooh, lovely. All right, anyway. Last one we'll take a look at tonight will be coals. Somebody wanted to look at coals today. Yes, the West Coast is beautiful. I'm hoping that me and the wife can get down there hopefully this year, buy a nice big boat and just float up and down the intercoastal from Naples all the way up to Clearwater and back again, back and forth, back and forth. Maybe pick up the grandson, take him with us. That'd be fun. All right, Kohl's, KSS. Okay, here we go with Kohl's. A year ago today, Kohl's was at 23.43. First thing I want to see, where's the high of the year? Where's the low of the year? Where was it a year ago? Where is it now? It's almost exactly where it was a year ago. Look. Okay? Over there, over here. These things you rattle off in your head. You say, all right, here's the high, way up here. Here's the low. Here it was a year ago. Here it is now. Did you make 50% on your capital last year? No. Last year I had three major losers. Three major losers. Hold on. TGT, which is Target. Bristol, no, B, that's what it'd be. Damn it. KMI. No, KMI is Kinder Morgan, sorry. Kimberly-Clark. Kimberly-Clark, Target, and PPG. Those are my three big losers. I did a little bit over 40% last year. Sorry. You don't win them all the time. All right. But this year I'm up 25% already, and we're just starting the second quarter. Okay, it might actually do 100% this year. That'd be cool. All right. Where were we? Oh, first thing I want to see. Where's the high? Where's the low? Where was it? Where is it? Simple. High, low. Where was it? Where is it? Anyway. Wait. Where are you now? I'm in the Boston area. I have a place in New York too. Heading back in May. Okay, well, yeah, 40% was wonderful. We're up here in the Boston area because this is where all the good doctors are. We have some medical. She has some medical issues. Me, I'm perfectly healthy. I'm older than her. It's weird. So to avoid risk, how much of your portfolio do you allocate to one position? Good question. I like to separate it equally. So if I have 5 positions, it's 20, 20, 20, 20. If it's 4 positions, it's 25, 25, 25, 25. What are you trading? Dividend stocks. All right, so we're looking at Kohl's. So let's take a look at Kohl's. All right. I should probably look at the numbers first to make sure the numbers work before we go through all this. $22.99. Okay, I can buy it at $22.99. We all know $22.99. The closest one is going to be the 30. So the 30, $22.99. Sorry, the 23. The 23 is going for 62 cents. 62. That's 2%. That's not 1%. That's 2%. Okay. Lambo Lariano. We're looking at Kohl's at the moment. Okay. $22.99. The closest strike price is the 23. It's paying 62 cents per share. Oh, and there's Honey out for her last cigarette of the night. And you know what that means? As soon as she's done with her cigarettes, it's time for me to go to bed. That's what that means. Okay, so.
I'm not the gatekeeper.
Yes, she is the gatekeeper. She says she's not the gatekeeper, but she is the gatekeeper. All right, let's take a look at the numbers. Okay, first thing I want to see, like I told you, high, low, where was it, where is it? That's what I want to see. Now,
All about the numbers.
a year ago, we opened up at 23.46. Okay, it bottomed down 17.93, jumped back up to the high of the year at 29.65. That's the high of the year, 29.65. Then she drops again, okay, to hit the bottom of the year at 17. Wait, where is it? 17.97. Is that right? No. $17.68. And that was in the middle of October. Okay, we finished out the year at 29.13. Okay, that was late December, early January. Now, the last 90 days, we go to the 18th. There's the 18th right there. Okay, 90 days. High, low, where was it? Where is it? Okay, where's the pattern? Up, down, up, down, up, down, up, down. Wow, it's a big one. Down. We're going to explain this one right here. This is an awesome opportunity right here. Let me explain it. Let me get there. Excuse me. No. 90 days ago, 25.11. Okay, she jumps up to 28.97, drops down, back up, back down, back up. The 90-day high, 29.62. The 90-day bottom was today, 21.43. Let's look at the last 30 days. Again, look at the pattern. Up, down, up, down, up, down. You like that one? Down. Hey, I got to entertain myself. I can't hear you people, so I got to entertain myself. Okay, so last 30 days. 30 days ago, we opened up at 24.96. A couple weeks later, we have the high of the 30-day period, 29.60. Okay, we're looking at Kohl's, KSS. Now, I love the 30-day high and a 30-day bottom. I do, because what happens after that? And look at this 30-day bottom. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. You ever hear the power of 13 when it comes to trading? We're going to see another trade update tomorrow. Are we? Are we? Are we? More than likely. Anyway, here we go. So, let's look at the seasonality chart. Okay, now she just went in for her cigarette. So as soon as I'm done with the numbers, I'm done for the night. So she's done for the night. So that means it's time for me to go to bed. Alrighty. So what does it normally do this time of year? I'm afraid to say. Look at that. Sorry, dude. I mean, don't get me wrong. You can't fight the trend. Now, the trend is supervents this. And just because it normally goes down this time of year, the trend supersedes that. None of them are stocks. There's no stock. They're equities. Oh, terminology. Terribly sorry. They're equities. Market will be down tomorrow, most likely. Check the latest on Israel, Iran, and news. All right, we'll take a look at that. However, it is what it is. So, that being said, I personally think, considering Kohl's is not in Iran or in Israel, I don't think Kohl's is going to be affected tomorrow. But that's just me. What do I know? So, that being said, I could buy it tomorrow morning at $22.99. Sell the 23s for 62 cents a share. And what is that on the calculator? Clear that. 62 cents a share, and I divide it by the purchase price, $22.99, and that gives me a grand total of 2.7%. Sometimes I say stocks. Well, equities, stocks, shares, they all mean the exact same thing. It's a portion of ownership of a company. Call them equities, call them stocks, call them shares, call them whatever you want. It's all the exact same thing. For each one, it's going to cost me $22.99. Ever sell calls in the money? Sure do. Okay, I would look at the 22.55s, 44 cents off of that. Yep, that's still over 2%. Yep, and it's 50 years until someone might buy the company. I don't know. I just don't know. All I care about is the next week or two. Because if I buy it tomorrow, I would like to be out by next Friday. That's all I care about. Once I'm out, the stock, the company could blow up and burn to the ground. As long as I make my 1% and I'm out, I'm okay with it. Now, it's 9:30. Sorry, it's 11:30. I'm sure it's 9:30 somewhere. All right, I'm done for the night. You guys have a great day. And for those of you guys I'll see in the morning. Oh, Via and Avi. Hello to you. I'm just signing off, dude. Terribly sorry. I've been here since 9 o'clock. I got to pee in the baddest of ways. All right, finish there. Ending broadcast. Ending over here on Instagram. You guys have a nice night over there. Ending over here on YouTube. You guys have a nice night over there. Blade, you're welcome. Hopefully I'll see you again tomorrow night. Tomorrow's Friday night. I'm debating whether I should do Friday nights because the attendance is rather thin on Friday nights. All right. Catch you guys later.